What's up everyone, I'm your host Edward, and on his channel I talk about stocks and crypto news, so if that's something you're interested in, feel free to subscribe and hit that notification bell so you can see my videos every single week. And don't forget to smash that like button down below for the YouTube algorithm. And yeah, there's some interesting news that I really want to get in today, so let's not waste any more time and let's just dive right in. So before I get into the juicy articles, I'm just gonna go through the markets really quickly, and today we can see that the Dow Jones, the Nasdaq, and the S&P is pretty much flat. There's a little bit more to the red side. So if we look at our heat map here, there's a little bit of green and red everywhere, but it seems like Wells Fargo is down about 3.67%, and XP Semiconductors is down about 6%, and it seems like the gaming sector is taking a rebound from yesterday's news. I'm just going to talk about that really quickly in this video today. And if we head into the crypto markets, we can see that it is down about 1.56% today, and the whole entire market cap is sitting at about 2.06 trillion. And Bitcoin right now is not looking too good at the moment. We have about 6 more hours to go to see if we can actually close above $47,000, and that's the target for this month. And hopefully, right, we can kind of push it back up a little bit before that happens, but it is looking like it's in danger zone at the moment. But we are still currently in the bull market, and all the technical analysis are looking pretty good. But the main article that I want to get in today is that Robinhood tanks after the SEC chair Gary Gensler tells Barron's that banning payment for order flow is a possibility. Now, in my past videos before Robinhood did go IPO, and I did warn saying that if the SEC does ban payment for order flow, then Robinhood wouldn't look like a really attractive investment. And the reason being is because most of the money that they're making is from payment for order flow. And this is pretty much the trick to give customers the option of, free commission trading. But I did do a follow-up video on Robinhood, and I kind of said that maybe the SEC might not ban payment for order flow because there's actually a lot of other institutions doing the same thing. And why would the SEC, right, who is under the US government, want their own companies to fail? So I mean, that was another possibility. Gary Gensler kind of gave everyone a shock, and like I said, this was a risk, and I don't think a lot of people did the research because payment for order flow getting banned was in the talks a long time ago. And if you kind of dig deeper, Robinhood makes most of their revenues because of that, because they send customer orders to a hedge fund like Citadel, and they're the ones trying to execute the orders for you. Obviously, right, they're not going to give you the best prices because they do have to make a little bit of money, right? So when a customer do buy shares, they won't explicitly see the amount that they're making, like Robinhood and Citadel, but it's so little that you can't even tell. But with millions of transactions, right, going through Robinhood every day, it really adds up, and that's how Robinhood became such a big thing. And in my opinion, right, if this does go through, I'm not sure how Robinhood's gonna be able to provide free commission trading for the customers anymore, because they will be losing a lot of money. And the reason why the SEC is looking to ban it, because first of all, right, customers aren't getting the best price, and second of all, these hedge funds and these companies are collecting huge amounts of data, and it seems like the SEC doesn't like that. So I mean, this is a risk that people have to consider. And we quickly go through Robinhood stock, right? We did see a dump here, and to be honest, I thought it should have dropped a lot heavier, but I guess investors are confident that it won't get banned, so we'll see what's gonna happen. But right now, Robinhood is trading at a $37 billion market cap, and Cathie Wood has been scooping a lot of shares when they did go IPO at about $35. But I'm not gonna dive into the numbers really quickly because I already did it in another video. So if you're interested in my full-length opinion on Robinhood, feel free to watch that after this video. But spoiler alert, I really do like their numbers. They do have a positive adjusted EBITDA, which I really love, but the risk on their main revenue stream is very high at the moment. So that's that. Next up, the gaming sector seems to be in trouble because China is planning to cut down on the time that children can play games. Now, this was a very unexpected news, to be honest, and in my opinion, this is going to be something very, very hard to control within the country. I'm not sure how they're going to do it, but it seems like children can only play about 3 hours a week of games now, and we can see that Tencent Holding, which is the biggest gaming company in the world right now, is down, as well well as other gaming related stocks. And it seems like gaming platforms can only offer services to miners from 8 p.m. to 9 p.m. And just looking at this type of article and all the other past articles about China, we can totally see that they're closing their borders and they want to show that they're in control. And this is pretty much called political risk, because China is currently second place in terms of GDP, and a lot of investors, right, want to diversify their portfolio into other countries and not just the US, which is why they're looking into China stocks. But looking into 2021, right, it's not looking too great for China stocks. I'm not really sure on the research based on the amount of games that children play versus their studies. But yeah, overall, right, very unexpected. Next up, Apple settles with app developers without making major concessions. Now, Apple had a lawsuit, right, with US app makers because of how controlling they are with the App Store. Because for those that don't know, any in-game payments or purchases, Apple takes a cut of it. I believe it was like 20 to 30%, but please correct me if I'm wrong. But that's a lot of money that Apple's making based on their app store. And the CEO of Spotify, right, did come out and kind of gave a huge criticism to Apple, because whoever downloads the Spotify app and signs up for a subscription, Apple also takes a cut of that every single month. And applications aren't able to, advertise other sorts of payments to bypass this app store fee that Apple imposes on all their app makers. So the settlement was about $100 million worth of payments to app makers, ranging about $250,000 to $30,000 per developer. And in my opinion, right, this is a win, because that is very, monopolistic of Apple. And I mean, Apple's doing well themselves. They're trading at a $2.5 trillion market cap, and they currently have about $34 billion in cash. So I mean, this is pretty much like a pinch to Apple. So yeah, that's that. Next up, Zoom shares slides about 10% on slowing growth. Now, yesterday, Zoom came out with their earnings and they kind of beat all expectations. However, their guidance is what kind of made the stock slide, because they're guiding on a 31% growth compared to 191% growth in the previous quarter. So based on their earnings, they had a 1.36 cents per share adjusted versus a 1.16 per share expected. And in terms of revenue, they had a 1.02 billion versus 991 million. But the reason why investors invest into Zoom is because of the growth that they're having during the pandemic. And for the next quarter, right, based on the way they're growing, a 31% growth is kind of weak. But I feel like they could be sandbagging this so that they can beat expectations next quarter, right? And people do that. And in this quarter, they did announce that they're going to be buying a company called Five9 for about $14.7 billion. But overall, Zoom is a little bit overvalued based on their numbers. And looking into their forward EBITDA, right, they're trading at a 59 times forward EBITDA, which is pretty insane. It's going to take you 59 years to get 100% ROI if Zoom was to trade stagnant for the rest of your life, right? That's called terminal value, right? Zoom isn't going to be trading at a straight line forever, but it just tells us how long it'll take to get 100% ROI based on the numbers that they're producing right now. But other than that, right, not really liking the numbers, but everyone is betting on a future where everyone just works at home, and that Zoom is going to be the number one player when it comes to communicating with other members of their team. And I did do a full video on Zoom in the past, so if you're interested, feel free to watch that after this video. Next up, it seems like Jack Dorsey's plan to build a decentralized Bitcoin exchange. There has been a lot of issues with people getting SIM swapped and losing all their assets, and this is a problem that Jack Dorsey wants to solve, where there's going to be an exchange, but everything is based on protocols without any third party controlling all those executions, and everything will be digitalized, and that all the codes and the protocols will do everything for you. And remember, it is decentralized and it's open software, meaning no hacker can, pretty much hack this exchange or take anything from it. And it is a big idea, right? And Jack Dorsey sees this as a problem and he's trying to solve it, because entrepreneurs are problem solvers, right? Not money go-getters. I think this is gonna be huge. I'm excited. I'm not gonna dive too deep, but if you're not highly familiar with decentralization, blockchain, or smart contracts, I highly suggest you to do your research, because protocols are going to be the way play out in the future, because no one can hack it. That wraps over this video. If you're interested in buying crypto, please head into my referral links in the description box down below, and we can both get a small cash bonus once you sign up and make some trades. If you enjoyed this video, please smash that like button down below for the YouTube algorithm. And if you haven't already, feel free to subscribe and hit that notification bell so you can see my videos every single week. That's pretty much it, and I'll see you all in the next video. Peace.